All right, guys, welcome back for another video. Well, in this video, I want to do a little bit of an update to the Federal Reserve Bank of New York central bank's liquidity swap operations. I've been tracking this operation for the last few weeks or so. The operation actually started in early October. Now, what's interesting about this, facility at the New York Fed is, this is relatively new, and I think the first transaction was around October 3rd in the amount of roughly 3 billion. And then there was one sort of in mid-October, kind of around October 13th, that settled for 6.5 billion. And that was between the European Central Bank and also the Swiss National Bank as a counterparty. Now, what's unique and interesting about this current one that we're looking at right now for a total value of 11.3 billion is that the Bank of Japan is also added as a counterparty on this transaction. Again, not for a significant amount, but we're seeing counterparties being added to this liquidity swap operation, right? It's growing from ECB and Swiss National Bank to also the Bank of Japan, and also the total dollar amounts, while still relatively low, have been increasing over time. So you had your first one in October at 3.5 billion, your second one mid October 6.5 billion, and now your third liquidity swap trade date on October 19th and the 18th for 11.3 billion. Anyway, this is the Federal Reserve pumping liquidity into other central banks markets that are having a shortage of dollars and need that liquidity injection. So like, don't be fooled. This is printing money. So it's important to keep an eye on this. I know I talked about it often, and I will talk about it often in the future because I do think this is very important to keep tabs on. But anyway, I'll just jump into price action a little bit. I know we haven't had a lot of updates with price, so I'll kind of just run through the whole thing. Kind of start from the top and go to the quarterly chart. Yeah, so right here we've got a test down into the previous all-time high. Go down to, yeah, you can see that the test right here. So again, when Bitcoin was trading in the trading range up here for a year, better part of 2 years, really, everybody would have told you, yeah, if we test down into the previous all-time high, that would be like the perfect buying opportunity. They would have told you that a year ago, but now that we're actually there and at that level, uh, the psychology is different, right? It's interesting how market psychology works like that. Let's see. Let's go down to the monthly. Yeah, the monthly is just a similar read, right? It's just showing you, testing down into the all-time high. Now the weekly, you can see the same type of read, but we get a little bit more price distinction on the weekly because we've got this RSI divergence confirmed on the weekly. Remember, there's never been bullish divergence on the weekly RSI in Bitcoin, which is why this level is so significant, right? You're seeing one of the most bullish setups ever, really, in Bitcoin's history. Meanwhile, you also see sentiment, uh, you know, one of the bearish sentiment I've ever seen in the market, and I've been in the market for a while. So uh, yeah, and then we can go down to like this level, just in a daily trading range. You have your capitulation here down into this level, right? You got your volume climax coming in right there. And then this is what we call a price shelf. This is a classic retest. So you test down into the all-time high. Remember, this level is the all-time high from 2017. You get your capitulation marked by the volume spike down into that level. Price comes back up, fills this retracement, comes down, hits that level, defends the capitulation low right here. Remember, this is a capitulation low marked by the volume. If you looked at Bitcoin realized losses, you would see that the realized losses spike there. We come back, retest those capitulation lows, then start breaking the highs right here, right? This runs the stops above this level right here, get a change in behavior. It keeps defending the lows. Then you get another run up, this time much further above this high, run back into a 618. This 618 is drawn off this high right here, run back there. Then you get a little bit of distribution up here. We covered in the last video how the Bitcoin whales actually set in these intermediate tops. Then you get this distribution up here, break of market structure right here, and you get a little bit of a trending behavior down back into those capitulation lows right here. And you hit those capitulation lows, and then what happens? You get a squeeze up back into this market structure break up here. Again, these levels have staying power, right? When you have a market structure break like this, a lot of times it'll create an inefficiency that gets filled at a later point in time and becomes a significant level. Now, while this is the all-time high from 2017, we can move it down here just for ease of reference. Now, price comes down off here, swipes these lows down here. That is the FOMC bottom from the last FOMC meeting in September. And you can see here that what the RSI is doing here, right? It's putting in some pretty significant divergence at this level right here, right? As, this low on price, a lower low, and then another lower low set in around that FOMC September meeting. I made a previous video about how that would ultimately probably be the low for the market. And you see price making multiple lows while RSI, puts in multiple draws of divergence, right? So you get your weekly divergence, your daily divergence, even a 4-hour divergence. And then we can kind of break this off. I marked off the quarterly opens here with these vertical lines right here. You can see the quarterly open tends to serve as a pivot, right? You get your capitulation, and then you kind of retest the capitulation low, and then you get your quarterly open, and then a change in behavior. Well, here we got another quarterly open, and I kind of want to focus on, what price did after that quarterly open. So we had our FOMC meeting here, right? Actually, right here precisely. And, but I want to focus on the quarterly open. So if you notice, volatility is flailing around the quarterly open, right? So we have this, maybe we see it better on the daily. Yeah, you can see it better. So you have these highs right here set in by FOMC, and these lows right here set in by FOMC right there. So now we get our quarterly open. We'll go down the quarterly, or excuse me, go down the 4-hour to see this. Get your quarterly open, and then you run just above these highs right there. Stop everybody out. Again, not much, but just above these highs. So you got the highs coming in here at 2383 on Coinbase, and you got it coming in here at 2479 on Coinbase. Then price runs down, takes out these lows right here. Again, these lows are 18,153, and this is 18,131. So going just $20 below there on Coinbase. And then you get your bullish breaker coming in right here. And so you get a flailing around of volatility. This is typical characteristic price behavior before a move. Now, if you are bullish or you're bearish, hopefully you're positioned on an extreme of the range, right? I got a pretty decent position on the lower side of the range, which is what you want to do, right? I mean, you don't want to be trading in the middle of the range, especially when you get volatility expanding like this, right? If you were opening a trade here, even if you were bullish or bearish or whatever way it ultimately directionally broke, you see how volatility whips up, stops people out, whips down, stops people out. So it's a good illustration of how one critical rule of trading is you don't open trades in the middle of the trading range. Now, part of that is being able to identify where a trading range is, and that takes a little bit of practice and experience. But it is a very important fundamental concept to implement in your trading methodology. Anyway, I hope you guys like this video. If you guys are watching and you haven't subscribed already, please make sure to subscribe to the channel, and I'll catch you guys in